You were listening to ChartingWealth.com for Wednesday, the 19th of October, 2016. Market up for the day, but still in a long-term downtrend on the 2-day and the 1-week chart. First day of our 2-day candle up 0.61% for the total market. Derivative oscillator lost some of its downward momentum, and the MACD is not going down at as steep an angle as it was the 7th through the 17th of October. It actually is running a little bit more parallel. Still big negative derivative oscillator. We have a doji that's formed so far on the first day of the latest 2-day candle at the end of the day on the 18th of October, going into the 19th. Let's take a look at the 4-hour chart, see what we see intraday. Lots of up movement in the morning, and then in the afternoon really didn't end much higher at all in our Heikin-Ashi candlesticks, but there was enough power in the afternoon to actually flip over the derivative oscillator and the MACD. So the 4-hour chart on the total market is now in an up move. It's what we call a pullback. Will that pullback be great enough to pull the 2-day chart that's currently in a downed trend line and the weekly chart over into an up move? Well, we'll have to wait and see. We will tell you options expiration Friday is coming up for October. Please pick up your copy of the Stock Traders Almanac. Turn this year to the page. I'm trying to see if that page is actually numbered. Well, it's number 97, and you will see options expiration Friday, down 6 straight from 2005 to 10 and 8 of the last 12. So please go in and delve into that. You will see that we have typically, with that kind of movement, down plays that are on the way, so we shall just have to see. But again, go research. Do your work with Stock Traders Almanac. We love that. Jeff and Yale Hirsch are just great guys. If you don't have a copy, you need one. You can probably go ahead and pre-order your 2017 version. So we've got a rollback right now. We'll see how that plays into things. If you've already jumped in on a down play in the total market back on the morning of the 11th of October, you would have done nicely. Now, do you want to pull out at this point? Well, it depends on how long you want to let it roll. As far as an inverse play goes, typically with inverse plays, it was a good one. Hopefully, you did your virtual trade, jumped in and jumped out, made a nice little killing, and have moved on. But again, we're still in a confirmed down move on the weekly chart. Nothing saying you have to. It just depends on how short or long term you wish to go. Let's jump into the S&P 500 as depicted by SPY. It is a spinning top the first day of the 2-day candle on the 18th, up 0.63%. We do see that the MACD is pretty much going from a down move to a parallel. The red signal line moving toward it. Derivative oscillators lost just a tiny fraction of its energy. If we look intraday on the 4-hour chart, we see up movement in the afternoon, a green open box candle, and a red open box candle in the afternoon. Green in the morning, red in the afternoon, and derivative oscillator, just like the total market, flipped over. So we have a pullback underway. We'll see if that pullback will be a complete rout or just short term, and if it'll rotate back over, giving us an entry point. Don't have that happening yet. We closed well below the weekly and the 2-day trend line. Keep that in mind and continue to keep an eye on the 2-day chart. Now, let's go from the S&P 500 to the Qs. It was up the most of all the charts, 0.89%. 0.9 almost of 1% up. The market is now above, well, actually has been above and continues to be above the weekly trend line, which continues to be moving up, unlike our other two indexes. 2-day chart has been down since the 26th of August. Still confirmed down, but the weekly chart, and again, as we say over and over, all things being equal, the market tends to move in the direction of the largest chart, which is the weekly chart, which is what it is doing. So what do we see going on? Well, we don't have any crossovers going up to parallel that. If we look at what happened intraday, we see there's lots up movement in the afternoon, a little bit of a pullback in the morning, rather, a little bit of a pullback in the afternoon, crossover on the 4-hour chart. Also, what does this mean to us? Well, we're being very hedgy with the weekly chart in an uptrend on the Qs, the NASDAQ 100, the 2-day chart in a downtrend, and now the daily chart in an uptrend. We want to see all three of our charts going in the same direction until we feel comfortable again with the Qs. Now, lastly, let's go back to our 2-day chart and check out gold. Gold was up 0.62%. Gold's in a confirmed down move on the 2-day chart and on the weekly chart. It is trying to rotate over. It looks like going up potentially on that 2-day chart. Has not happened yet. Derivative oscillator lost speed, and the MACD did move more parallel. If we look intraday, of course, we see up movement in the morning and the afternoon. That up movement pushed it through the down 2-day trend line on the on the half day or the 4-hour chart. And again, we've said over and over, this 4-hour chart has been working for us. And of course, if you jumped in around the 12th in the afternoon, that is last Wednesday, it went sideways for a while and then over the last day has shot back up. If you would have jumped in at some time that afternoon, the market ranged from a high of 119.91 to a low of 119.29. Where was it at the close of the day? The high throughout the day was 120.64. It closed at around 120.45. So again, not bad, but again, our trepidation with all of this, a trepidation that we continue to talk about with gold, is that it's in a long-term down move on the weekly and the 2-day, and this 4-hour, unless it's really a change of heart, change of sentiment in gold, is going to be short-lived. So be careful. And again, practice. That's what we're all about. We're not a stock calling service. We're an education firm. We don't give market advice. We want you to practice with us. When you get good, then when you become a good chart reader, when you become a master of the charts, then the world's your oyster, man. Go out there and make up your own rules. Use what you've learned that works and make your fortune. But in the meantime, study with us every day. If you don't already receive our newsletter on a daily basis, you need to. How do you do that? You go to chartingwealth.com, sign up. We will send you with each newsletter the podcast in video format so you can sit there and watch it. You also will have a link to our How to Read a Stock Chart video. Take you 15 minutes to understand what it is we're doing. We keep it very simple and straightforward. In addition to that, you'll receive our layout that we use from freestockcharts.com. What does that cost you? Nothing. It's free. That's why we use it. And in addition to that, we also provide for you our daily market worksheet that we want you to fill out every day. And if you haven't seen that training, please go to it, watch it, listen to it. I actually fill out a daily market worksheet and show you how that works. Again, thank you so much for listening to us. You appreciate what we do. We ask you to do 2 things. First, go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. It helps us with the metrics. You guys have made us up to number 6 in the world on Stock Market Podcast, and we so appreciate that. Also, go to YouTube and subscribe to our channel. That's where we first upload everything that we do, in addition to sending it out to all of our members whose email addresses we have. Thanks so much. We will talk to you guys soon. God bless. Hope you're following the program from chartingwealth.com.